I'm joined here today by Katie Barthmaier of WP Carey. Thank you so much for joining me, Katie.
Thank you, Zoe.
WP Carey is well known for corporate sale leasebacks, but we're seeing a significant growth of the secondary transactions. And I know one recent acquisition was the global headquarters of Avnet, their technology solutions group in Phoenix, Arizona. Tell me about the deal. Give me some key highlights.
Avnet is a global distributor of electronics components. They're an investment grade company rated BBB-, and they're headquartered in Phoenix, Arizona. The particular facility that we bought is the headquarters of one of their divisions, the Global Technology Solutions, and it's located in Tempe in the Arizona State University Research Park. The facility was leased to them by a company called Piedmont, and Piedmont extended the lease to be a new 10-year term. And so we acquired the facility subject to the 10-year lease in December of 2013.
And tell me about the sellers of the Avnet Technology Solutions headquarters, Piedmont Office Trust. Why were they selling? What were some of the motivations for them?
Yes, so Piedmont was motivated to exit the transaction to maximize their IRR returns with a shorter hold period. They also were focused on closing the deal before year end. So we had to move on a very tight timeline, and I think that's one of the reasons that they chose to work with us, just the certainty of close. I think we signed the transaction up in mid-November and had to close by December 30th.
How did you get comfortable with the deal and obviously such a shorter lease term?
Right. Historically, we're known for acquiring 15 to 20-year leases. In this case, we were able to get comfortable with the 10-year lease for a few reasons. On every transaction, we look at the credit quality of the tenant, the quality of the real estate, and how important the asset is to the company. In this case, Avnet is a very strong global company, so we weren't concerned for those initial 10 years. The real estate is an excellent asset in a beautiful location in the ASU Research Park. And when Piedmont extended the lease, they actually reduced Avnet's rent. So the rent is well below market rent. And the facility is important to Avnet as it was a build-to-suit for them. It's the headquarters for their technology solutions business, and we think that they will be committed and stay and extend the lease.
And when you're looking at obviously the credit quality, obviously the tenant quality, are there things that you actually look for, kind of the loyalty of the tenant to the property? Was there anything in terms of Avnet that said, yes, they're going to stay here perhaps for the long term beyond that 10-year lease?
Yes, absolutely. Again, the fact that it was a build-to-suit for them, so it was built to their specifications. Also, they had spent a lot of capital in upgrading the facility, and as we were analyzing the transaction, they actually decided to move forward with a solar panel project, which again just demonstrates their commitment to the facility.
So how are you balancing that credit analysis, obviously with Avnet, and obviously the real estate?
Every transaction is unique, and I would say that the key word is balance in this situation. The pricing that we are able to provide depends upon the balance between the credit quality, the real estate, and the importance of the asset.
And obviously, in terms of secondary transactions, I'd love to get a sense as to, is this going to become more of a focus for WP Carey as you look out over 2014 and maybe in the future?
I think it very well could be. There's some interesting market dynamics going on right now where we're driven to deliver long-term dividends to our investors, and other institutional investors are more focused on IRR returns, so they're looking for a faster exit. And I think that there can be more situations like this where the institutional investor will go to the tenant, give them a rent concession in exchange for a lease extension, and someone like us can come in and buy the long-term cash flow.
And obviously you mentioned the below market rent. What are you underwriting in terms of rent market for such a market as kind of Phoenix, Arizona? Are you expecting rent increases in the future as you look out?
I believe that there will be rent increases, particularly in this submarket and in this particular research park. It's a beautiful location. It's a very corporate campus feel, and there are about 25 sites within the park, and most of them are already completely leased. There are 2 new build-to-suits going on in the park, and the rent for those build-to-suits are substantially above where our rent is set.
And in terms of supply, do you see that as an issue in secondary markets, especially when they're technology-driven? There seems to be quite a lot of appetite for technology-driven real estate.
It's interesting that you mentioned the supply, because one of the other things that came out in our discussions with brokers in the Phoenix market in particular was that while there is some vacancy in the market, there's not a lot of large blocks of supply. And so if a tenant were looking for a new facility, most likely they would have to build a new facility.